Lucid stock investors got some great news on October 7th, 2024, as the company updated its third quarter production and delivery numbers that showed a solid increase. In this video, I'll review the details of those numbers, compare them to the last year in the same quarter to demonstrate the significant growth, and discuss what this could mean for Lucid stock investors. So let's take a look at the details after this brief message for my sponsor. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Alright, so Lucid announcing that during the third quarter, the company produced 1,805 vehicles and delivered 2,781 vehicles. A couple of things are interesting about this latest quarterly update from Lucid. First, the company's delivery numbers were significantly above the production numbers, signaling that it's working down its inventory, it's keeping its inventories low. Secondly, the 2,781 vehicles was a big improvement delivered from the same quarter last year. In the third quarter last year, the company delivered 1,457 vehicles. So this year, 2,781 are almost double the amount of vehicles the company delivered last year. And that's great news for Lucid stock investors because many other EV companies, especially US-based EV companies, are not reporting this kind of growth. You've got the leader of the industry, Tesla, reporting very, very small growth. You've got Rivian reporting flat and declining sales and lowering its guidance for the rest of the year. The EV industry overall is struggling in 2024. The growth is nowhere near what was expected when these companies were formed and launched. And so for Lucid to deliver this kind of growth in this type of backdrop was really impressive. Also, the good thing that Lucid stock investors have to look forward to is the company's SUV is slated to launch over the next few months. The Gravity SUV is expected to be priced around $80,000, and that would make it comparable to Rivian's SUVs that are also priced around that range. And Rivian's SUVs are selling pretty well. Rivian is going to sell close to 50,000 units this year overall, and SUVs might make up close to half of those sales. So that would be a big improvement for Lucid if it can get into the tens of thousands of sales for the year. It's still trying to get above that 10, 15,000 range. And so with these large car companies, these are investments that require tens of billions of dollars, and you can't make these companies work at small scale. Car companies are companies that require large scale to become profitable and self-sustaining. You can't survive as a car company by selling 10,000 units or 5,000 units. These need to be 50, 100, 200,000 units in order to break even, and then even more if you want to produce a profit. For example, if we compare this to Rivian, Rivian sold 50,000 units last year and lost billions and billions of dollars on the bottom line. So Lucid is far away from the point where it's going to be profitable or self-sustaining, but it is making good progress. At the very least, when you have a company that's losing a lot of money on the bottom line, you want to see growth, you want to see progress, and Lucid demonstrated that in the latest quarter. This year, management's goal had been to increase demand. For a while, the company was supply constrained, but it increased manufacturing capacity, and now it has way more manufacturing capacity than it has demand. So it needs to really boost demand so that it can increase manufacturing utilization rates, which will then start to work its way towards profitability. I mentioned financials, and you can see in the third quarter last year, let's look at the 9 months in last year that ended September 30th. The company generated $438 million in revenue, but it lost $2.362 billion on the bottom line. If you look at the third quarter only in the last year, the company generated $137 million in revenue, and it lost $752 million on the bottom line. So in the third quarter this year, when we get the full financial picture, for now, we only got the production and delivery numbers, but when we get the full financial picture, it looks like revenue will be roughly around 250 million, maybe a little more than 250 million, and the loss from operations hopefully will not increase. You can see last year, third quarter loss from operations increased as revenue decreased year over year. And so this year, with the increase in revenue expected, hopefully the company can demonstrate shrinking losses on the bottom line. I don't expect the company to be anywhere near profitability, but I want them to demonstrate progress, right? At least demonstrate slower losses on the bottom line so investors can have something to look forward to and can extrapolate that, okay, if they sell this many units next year, those losses on the bottom line will improve even further. And then with the new model coming out, the Gravity SUV, the first few months and probably the first few quarters will not look great, but maybe towards the end of 2025, with the unit sales of the SUV increasing to supplement the sales of the sedans, maybe Lucid can start talking about gross profit margin positive in 2026 or maybe 2027. We can start to see discussions and we can start to see the path towards profitability. And then Lucid is also aiming to have a lower priced sedan coming out around 2026. And so now you can start to see the makings of a company that can be self-sustaining. As it is right now, they are a long way away from that, but this recent data point was really good news because you look at the company's third quarter last year, their sales actually decreased. From 2022 to 2023, the third quarter revenue went from 195 million to 137 million. So you had a company with massive losses on the bottom line and sales decreasing. That is nowhere near something you want to invest in. But with revenue growing, roughly doubling, and losses shrinking, now you can start to see something happening. But this needs to be more sustaining, not just one good quarter like this. And you can see Lucid in the last 5 days, Lucid stock price is up to $3.43 per share, up from around $3.28 per share. Of course, I've been warning investors not to buy Lucid stock for almost 5 years now, and you can look back at Lucid stock price chart over the last 5 years. It's down from around $60 per share at its highs, and it's now trading at just $3.42 per share. So hopefully you listened to my recommendations to avoid these EV stocks, Lucid, Tesla, Rivian, etc., etc. I've been telling investors to avoid these EV stocks because the industry demand is nowhere near what was forecasted and what was expected and what was planned for from these EV companies. Thankfully, they are moving in the right direction by decreasing supply, decreasing marketing expense, decreasing expectations, decreasing capital expenditures, and trying to survive on a smaller total unit sales base. It's going to be difficult to do, but they're at least making the right adjustments to deal with the changing and the reality of the electric vehicle industry. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.